Okay, excellent. All right, cool. So my background, since 2012 has been in banking and private equity. I started at Goldman Sachs in our investment banking group. The first, okay, so as I go through my career, I'll share with you guys lessons learned as well over my career, and we'll sort of, figure out, how it'll apply to you all. One of the first questions I get from underclassmen, or sorry, university students, not MBAs, is, hey, what industry or what industry group should I go into, or what should I sort of target? And I felt like, as I thought about my career, and I've seen, and Kevin asked this question about Elevate, we sort of see, thousands and thousands of students and professionals every year. I think the couple tips on industries to pick and areas to select are, one, I would really rely on, number one, like, where are your professional interests, right, or personal interests lie. The reason for that is, versus, whereas 5-6 years ago, you could probably get away with being generalist, like, for the first, like, 5 to 10 years of your career. In today's market, right, whether it's a buy side or frankly other related careers, we're seeing people being much more specialized a lot earlier on, right? So let's say you go into healthcare and investment banking. There's a high probability that you will recruit for a fund and they'll put you in the healthcare investing, investing team. So, or consulting or whatever it is. There's still a bunch of generalist programs out there, but generally, I would say it becomes a little important, right, when you think about your careers, to start in an industry or a type of group that is aligned to your own career interests. So that's maybe number one. And number two, the other vertical, or the other metric I would use for this is just sort of see what is the pathway ahead for the next 3 to 5 years in that industry, right? So, when I was coming into banking, it was the years after the financial crisis. And for me, I was looking ahead and I was like, well, there's an immense amount of disruption that's going on in fintech, or, financial services, insurance services, specialty finance, credit cards, lending, that whole space that had been sort of that a void had been created from the financial services meltdown, because all the banks sort of pulled back on lending and all this stuff. And so I thought there was a huge opportunity in financial services, and that ended up proving out, right? So I joined Goldman in our financial services group. Within my first couple of years, I ended up being the lead associate on 3 of the largest deals, right, that Goldman had worked on, in the last 20 years. So I think, again, right place, right time, maybe, but also putting yourself in positions to be successful. And that's sort of my second piece of advice for you guys. It doesn't, like, there's no harm in going down the wrong career path or figuring out and changing things along the way. The one thing I would highly recommend everyone do is go into careers or firms or, groups and so on, where there is a good amount of deal activity, right? So even if it might not be the end all be all industry group that you get into, you at least get a lot of reps, on the desk your first couple of years. You'll start noticing that the further, obviously we're at Brown today, the further you get away from coming from Brown or a top university, the more reliant you all will be on the deal experience that you worked on, and the expertise that you're building by that, right? So I remember most of our buy-side interviews, yes, it's nice if they go to a good bank, but almost always we sort of make the determination on how far they advance based on the deal activity that they've worked on or led. So I just say the second piece of advice, number one, is getting to a good industry group. And number two is getting to a industry group or firm where you are going to get a good amount of deal activity. Okay, I will take these questions in 1 second. And Matt, I think I want you to, if, as much as possible, would love interaction so people can ask questions. It'd be great if you guys ask them live. Okay, let's keep moving through my career. I'll get to you, Matt, in 1 second. I think, post bank, the other thing, I'll get to that in a second, but post banking, as many of you all do, or maybe pre-banking for you guys, I would say, so I made this transition to go into private equity. And for me, I really like Goldman as a firm. And so while I was recruiting externally, I had the opportunity to join Goldman's own private equity group, which was a tremendous opportunity for me to sort of join at that point. And so I joined as an associate, made vice president. And there I was, again, working on financial services transactions, now from the buy side. So anyone who's sort of new to the terminologies we're using, whereas I was in investment banking, which is more sell side, where we are working with clients as strategic advisors. Now that you transition over to the buy side, you are effectively the buyer. So you're the investor. So you would hire Goldman to buy a company or sell a company on your behalf. So now you're the principal. So what that means is you effectively are the owner of a company. So the work that you're doing is very different on the buy side than on the sell side, because on the buy side in private equity or venture capital or growth equity, all the work you're doing is going towards figuring out if this an opportunity or a company is worth buying, right? So is it something that you want to own for X amount of years and sort of, sit on the board on or operate, et cetera. So it's a different sort of lens. It's a completely different job. And honestly, for me, it was a pretty big transition. It's a big transition for every single person that I interact with and Elevate, right? So obviously every year we have thousands and thousands, thousands of bankers make the transition to the private equity. That always is a very hard transition because you're going from an advisor to a principal, right? From, so that always becomes a hard transition. I'll talk about how to minimize that. The third thing I'll say is, and then kind of in private equity since then, I think the other thing I would sort of highlight for you guys is the third lesson learned, I suppose, is try to take leadership roles, right? I think, when the Brown team reached out, I was pretty impressed by the private equity club in that it was sort of an organization that was started and sort of had built momentum. And so my point is on that, wherever you are, try to take on leadership roles. So for all the students here who might be underclassmen, go to David or other folks on campus and sort of figure out, how do I get involved with Brown? How do I get involved with the investment club? If that's something you want to do, or pick other things that you're interested in. Maybe it's, tennis or, I don't know, like math Olympics or whatever it is. I think, figure out things that actually interest and excite you and take on leadership roles. And the reason for that is within careers in private equity, banking, consulting, et cetera, at the junior level, there aren't implicit opportunities to take on leadership roles, right? So you're an analyst, you're working at your desk, you're supporting all these different teams, and often seems like then you're asked to jump to become an associate and now suddenly start leading teams. It's a hard transition to build some of those leadership skill sets. So either in college or afterwards, for me, it was sort of taking on leadership roles at Goldman, right? So whether it was sort of serving as chief of staff or within their banking FIG group, or sort of associate recruiting team leads or summer analyst leads or whatever it is, important definitely to try to take on as many leadership roles as y'all can. I think we went through Elevate, so I won't belabor this point. Like I said, the goal is to build a network of professionals and obviously students in the space. We have a networking platform, an educational platform, a training platform, a recruitment platform, et cetera. We're kind of partnered with all of the top universities, a lot of the top firms on the platform, et cetera. I will share some of these links with you guys either now or in the email afterwards, and you can absolutely check it out. I think it's definitely a lot of cool resources, and I think it truly is a way for you all to sort of break through the opaqueness of certain firms or recruiting and so on. So I hit on the upcoming events as well earlier. So I guess the first place I'd like to start with you guys, I know there's a few questions, so I will get to that in a second. The first place I want to start with you guys is sort of what is the lay of the land in finance or business careers for everyone? And in some sense, we've broken this down into what I see as like the 5 biggest careers that are like Elevate people go into. The first one is investment banking. It is still probably the top most popular, call it, career choice for a lot of our students. And there's several reasons for that. One is, you get to build a table stakes level of skills within financial analysis, transaction analysis, due diligence skill set that then you can use to sort of apply in any other thing that you want to do. It's also a great place to start your career. One, credentialize yourself, but also number 2, get to work on what I said earlier, right? Very, complex, interesting, cool transactions that you can then use as a jump off point to do other things. Frankly, a lot of reasons people go into investment banking is to just preserve optionality, right? So they're like, hey, I don't know for sure I want to go into investing, or I don't know for sure I want to go into, corporate strategy, or I don't know for sure if I want to start a company. Let me sort of preserve a little bit of optionality while still building experience and credibility. And that's another reason why people go into banking. We can get it as folks have questions. We could always get into that. Private investing. So the crux of private investing team is, like I said earlier, it's investing as an owner, right? And so it's finding the private investing edge or edge that you have as an owner. I think the fourth lesson learned, I suppose, is I actually did not realize that private equity is all about sort of finding your edge. What I mean by that, or private credit, or whatever, these careers, and frankly, even growth equity and venture capital. A great example of this, right? When I first started in private equity, I would ask
whatever
my MD,
bouncer thing.
oh, hang on one sec. Sorry guys. Oh, I think it's someone on the call. Okay, so I would ask my sort of senior partners. I'd be like, hey, there's these 10 companies that are coming to market. Can we just go bid on all of them? And then they'd be like, okay, yeah. I mean, I guess if you want to, you could. But sort of, Kaushik's like, what is our edge in these deals? I'm like, well, what do you mean? Like, I think they're great companies, and I think we could, pay X, Y, and Z for it. I think we get a good return. I know I do all these models, and I kind of show them, and they'd be like, well, honestly, like let's say you're Goldman, you're going to be competing against all your competitors that you see on the page, right? Blackstone, whoever, they could all put the same bid for the same company because they see everything the same way. And so now you've just spent 4 to 6 weeks like assessing a company without any clear edge, right? So how I want you to think about approaching things is like, what is our edge, right? So let me give you the answer that's the inevitable question, like what is an edge? Kind of things like, if we have portfolio companies in that space, and so we can sort of roll them up and build a more conglomerate or sort of a sort of entity, that is an edge. If we have particular management teams in the industry that we love and we think that would be great additions to this board or this kind of management team, that is already an edge, right? So if we have a unique way to finance a transaction that maybe is not out in the market because of our other portfolio company or some other thing, maybe Goldman's balance sheet has an ability to do that, that is an edge. So it's sort of a thing I want you all to focus on is as you embark on careers in private equity or private investing, figure out, and this is actually not just at a firm level, like what is your edge, right? So for instance, like if you have spent your college years sort of researching financial technology or healthcare or whatever, that inherently could be your edge, that you're like, hey, of all the companies that we're going to see come to market in the SaaS space, this particular company is, because of all the research that I've done, therefore we should spend a lot of time on it. So your edge doesn't have to be something like, oh, I need to have like like a bridge loan from the specific guy, like or firm set up. It can just simply be information edge, time edge, people edge, relationship edge, portfolio company edge, whatever it is. But you got to figure out what your edge is, because otherwise you'll be bidding for all these companies and sort of being in these processes without any clear advantage, and then you would just end up wasting a year and not winning anything, right? So I think that's one lesson learned I had to learn early on, is to figure out your edge, and we'll come back to that maybe later if there's questions on it. The other thing about private equity mostly, not private credit. So just to be clear, private equity is equity, investing in the equity of the business. So, and then private credit is investing in credit or the debt of the business. Again, it's sort of slightly, it's similar because you're looking at private information, private companies, but in one case in equity, right, you're the most junior, therefore you expect sort of the highest rate of returns. Whereas in private credit, you are slightly more senior in that you're taking on, debt in a company, therefore it's a much lower risk profile, but also a lower return profile. We can get back to that if folks have questions on that. The key in private equity team is twofold. Number one is to really find the right fit firm or fund for you. Whereas in investment banking, I would say like all the firms are pretty much the same, whether you go to bulge bracket, upper middle market, boutique, whatever, it's similar work. But private equity, really, there's a huge difference, even within mega funds, right? If you go to a Carlyle versus Apollo, huge difference, right? So I think in terms of how they approach things and how they invest, and value investing versus other investing. So just kind of be clear and be diligent, and that yet again is another way you guys can go back and listen to a lot of the speakers we've had on from these firms to figure out, right, what is the difference between Centerbridge and Blackstone, or between Carlyle and Apollo, or between, blah, 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 and KKR, whatever the things are, right? I think it's important, for you guys. Again, it's not critical as a student to know that, but it might help you as you think about where your interests lie and how to approach these careers in a certain way. Okay, so let's keep moving. The next big chunk of careers, I'd say maybe about 25% of our people go into, maybe 20-25% is growth equity venture capital. This is becoming exceedingly popular these days, partly as you can see with the capital markets, just how much investments are happening in the growth equity technology space, and number two, partly because of the explosion of technology and its sort of ubiquitousness, right? And a lot of companies are staying private a lot longer. So you sort of see, whereas in years past you get to Series D and then you go public, now you're seeing E, F, G, and then you go public. So there's sort of plenty of and because a lot of companies just don't want to go public, right? It's sort of there's this whole like notion of having to go to the public markets and whatever. So you're seeing a lot of companies staying private a lot longer, and therefore it creates a lot of opportunity. So let's say as a venture capitalist, you invest in a company, in Series A, but let's say the company grows and grows and grows and grows. I mean, Canva is a good example, right? It's $40 billion valuation. It's sort of in late series. I forget what series they're in, but they've gotten so big, but they're still, they're still, in the sort of growth phase, I suppose. And so there's a lot of capital chasing that. And frankly, until about 3 months ago, the public markets were, returning really, really well in these technology companies. So you could kind of see the private equity money, whereas the buyout money was kind of flowing downstream to growth equity. I mean, things are changing a little bit. Again, we'll get back to that. But anyway, growth equity, the key is two differences between growth equity, venture capital, and private equity. Number one, it's earlier stage, and number two, it's usually a non-minority stage, right? So when I talk about private equity, it's like you're taking a company private, or you're taking majority ownership in a company. Whereas in growth equity, venture capital, you're taking usually a minority ownership in a company. Again, we can answer any of those questions if people have. Public investing, maybe 10 to 15% of our audience goes into public investing. I won't spend a lot of time on public investing here, but here I think the key is you guys have to, if you want to go into public investing, here's sort of quant roles, research roles, hedge fund roles, kind of any of those roles. You have to be, you have to sort of be in the mindset of am I going to succeed in an environment where all the information is public, right? So what is your edge into a company or whatever? A lot of the investing you're doing now is going to be obviously public investing. So figure out for yourself if you like that type of investing or not. And then I'd say about 15 to 20% of our audience probably goes into consulting. So this is, McKinsey, Bain, BCG, Deloitte, Accenture. There's a ton of consulting companies or sort of corporate strategy companies. Again, here it's slightly different, right? Again, many firms, many funds. So if your ultimate goal is to get into private equity, I would say about 40% of 35 to 40% of the jobs end up going to consultants, right? So I think that's how the industry has trended recently. And so it's by no means like saying you only have to go into banking, right, to go into private equity. And actually, I would even step back, figure out why you want to go into private equity or growth equity, not just because you see other people go into it. I'd say figure out for yourself, what about it sounds interesting, and so on. Okay. So, okay, let me pause to see if there's any questions, guys, and then we have a ton of slides. I keep going on this, but and I'll just pause to see if folks have, and by the way, if I'm like talking completely crazy stuff, just let me know, and I can sort of drill down on any other stuff.
Hey, so you mentioned about finding the right private equity firm for you. I'm just kind of curious. You also said that you really liked Goldman as a business. What attributes of Goldman did you like so much that made you want to be there?
Yeah. So good question. So I mean, there's many. So I think for me, again, there was sort of options both internally and externally, right? To sort of do, and you'll see this as well, right? As you go through your careers, be very judicious about the opportunities that you do take on, because grass sometimes is not always greener, and I think this actually proven a lot not to be the case. So for me, specifically with Goldman, like, look, I can sort of only speak to that bank because that's where I spent the early part of my career. I really liked that you had an amazing amount of information flow, right? So because of sort of, being a leading investment bank, sort of being a leader private equity provider, and being all these things, you sort of, and not proprietary information. I mean, like if you sort of wanted to decide if you wanted to buy a company or enter an industry, you had a set of bankers who are the best in class, at least in my industry in financial services, that you could always sort of use as your network to do that, right? So assuming that Goldman wasn't conflicted out because we were a sell-side advisor, our bankers would be there to help us on that stuff. Number two, we were able to sort of leverage a lot of the benefits, especially being in financial services, of having a balance sheet, right? So we didn't have to go externally and sort of always raise financing for these, mega deals. And that actually was a huge advantage if you think about how, and our firm had become a balance sheet bank after the financial crisis. And so that presented, like if you think about just cost of capital in financial services, if you're kind of looking to, incubate markets, or if you're kind of looking to do any of these things, that low cost of capital is really, really important, because that's the only way you can sort of win, right, in financial services. I hope that makes sense, Blake, on kind of the point that I'm making. If not, I can go into that. So number two, I'd say the balance sheet and the ability to sort of leverage that portfolio. Number three, we had a tremendous track record, right? So I would say, there's been recently a little bit of reorg, which in the private equity team, but I think, historically it's been, one of the large mega funds. And I think since sort of the last couple of years, like I said, there's been some reorg. So it's sort of maybe, maybe there's a few differences now, but historically it's still been the same experience. Like we were competing with all the same firms. And so it was like, well, why go and start like from zero at a different fund when you sort of have this entirety of reputation, et cetera. And frankly, number four, like I was doing really well there, right? So sort of why leave somewhere you're doing really well and try to go, like I said, start over at a new place. So I think we all have this like inkling, and trust me, I eventually left. So it's not like I'm telling you, I'll stay at the same firm for the next 20 years. I'm just saying like, it might not always be the best decision for you at different points. So you have to kind of take it. And look, there's always pros and cons. There's always trade-offs to any decisions you guys do. And it's not the end of the world. When I made this decision, I was like in my mid-20s. So again, it's not, and that was a few years ago. So it's not like things worked out way better or didn't work out better. At the end of the day, it's you and how you decide to use it. But at that point in time, it made a lot of sense and actually worked out for me really well. I think if you're doing well somewhere, like try not to like, there was a book, I think it's called like, I think it was a Malcolm Gladwell book. It's sort of like we have a tendency as humans to like, when things are going well, to suddenly like rattle the cage and like try to change things up. And look, that's fine if that's the way. And I made the transition from banking to PE because I wanted to do something completely different, right? So, and we had a conversation with the senior people, and they're like, hey, Kaushik, we want you to stay so we can sort of, help you kind of go to the PE side. And the firm had my back, and it was like my second home. So it was like, I didn't want to leave really. Right. And so that's sort of some of the reasons, Blake. So, it was like, it was a personal decision. I think maybe it's not the same for everyone, but again, for me, it was a good decision because I'd grown up in the firm. Right. So that's sort of my nostalgia, I guess. Okay. So, okay. Good question. Sorry, there was more questions. I think I read somewhere that maybe. Okay. All right. We'll get to the salary question. What, Matt, do you want to ask your question?
Yes. I was just wondering which industries that you were talking about, like the importance of like thinking about 3 to 5 years in advance of what industry you liked. I was just curious what industries you're most excited about right now.
Yeah. Look, and I think, by the way, Matt, good question. When I speak about that point, I think there's like an inherent like acceptance that is, I should have added for you at the end of it, right? So like, what are the most interesting industries, or what are the industries that are more exciting over the next 5 years for you? So that answer obviously is going to be different for every individual. And I'll come back to that point in a second. Because, it's funny because when I was in FIG and I was kind of recruiting for FIG, a lot of people would say, oh my God, like, I don't know anything about financial services. Like, I just want to go to kind of this other industry, healthcare or CRG or whatever. And I was like, that's great. Like the industry decision is a very different decision for every single person. And for me, right, and even step back one step further, Matt, I think your goal in your career for every single person on this call, right? I don't care if you're a senior, a junior, a banker, a private equity professional, or a freshman or whatever. Every single person that I try to interact with and elevate, I say this to every single school. You have 3 goals in your careers, right? So kind of, if you can triangulate to achieving some combination of all 3 of the next 3 things I'm going to say, then I think you're going to be well on your way. Number 1 is understanding where are your, what are you good at? So what are you like inherently over your career? What can you be the best at something, right? And the reason why this is important is people do not spend the time to try to understand and figure this out. And as a result, what happens is 60% of my investment bankers go into PE. Oh, okay, I want to go into PE, whatever. But they haven't sort of taken the time to figure out, hey, do I like the ambiguity of investing. Do I like the fact that I'm going to be working on 3 or 4 companies every year and I'm going to be doing 100 foot deep? Do I see things in trends as far as the industries goes that I can act upon as an investor? And because they don't do that, they come around from the other side, and then they go to business school. We're also partnered with the 10 or 12 top business schools. And then I get the same questions that I'm getting now after business school. Oh, I did banking, then I did PE. Now I'm at a top 5 business school. Now what do I do with my career, right? So I think the further you sort of not try to think about that, the more years you'll go by. And at the end of the day, time is the most important resource, right, that we all have. So the better off you can sort of come up with some of these answers, that the sooner the better. So number one, what can you guys be the best at? And I don't mean day one, what are you going to go become the best at, but what is a job that's going to help you build those skills such that you can be the best at something? If you really truly love investing, then yes, going and working in private equity for 2 to 4 years is going to make you a better investor, whether you want to stay at that firm or do something on your own and start your own fund or whatever the case is, right? So number one, work on things that you can become the best at something, because ultimately, folks, I'm telling you, like in this world, in this industry, like people deal with like the top 5% of people that are good at anything. So there's top 5% bankers. So if you like client interaction, you like building relationships, you don't need to move away from banking if you really like it, because we interact with, top 5%, top 10% people in that industry. So the number one thing is kind of figure out and work towards what you can become the best at. Number two, where are your unique interests? Like, where are your passions? Like, for instance, Matt, you asked me the industry question and I will answer that in a second, but I'm going to throw it back to you. Like, what do you wake up in the morning kind of saying, hey, I cannot wait to go read the news on like the newest like iPhone or the newest like car or the newest, consumer retail trend or the newest handbags or the newest shoes or whatever, the sports and whatever, or sports and business. Again, there's a little bit of a difference between personal interests and sort of professional interests, but the more you get excited about, the industry or whatever you're working on, the much better off you are. Because in this industry, in private equity, for instance, I asked my MD once, I was like, hey, why'd you pick FIG? And they was like, well, honestly, like when I wake up in the morning, I want to read payments news. Like I'm excited by it. And I like want to go and figure out, I want to go meet all the players in that space. And this goes back to my knowledge of, you got to become the best at something. So because the question I always get is, oh, I want to join Goldman. I'm like, okay, what industry groups are you interested in? Oh, I don't really care. Any group is fine. I'm like, okay, but like we have 8 to 9 industry groups at the firm, like everything from natural resources to TMT to FIG to healthcare to real estate to blah, 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 right? So is you have no interest? And they're like, no, I just want to join Goldman. I'm like, well, look, like you haven't done enough of the work, because I mean, not that it's not a bad answer. Like it's fine. You're still figuring this out, but you're doing yourself a disservice if you go join NR and you spend 2 years just because it's Goldman or it's, JP Morgan or Citigroup or whatever. And then you come out on the edge and you're like, you know what, I could not care less about natural resources, and you just want to waste the time, right? So my second point is figure out what excites you, what are your passions, what are your interests? And then the third element, this is the hardest, is figure out how you define success. Figure out how you define impact. For some of you all right now, you're in college, it's going to be, I want to make the most money that I can. Great, that's awesome. But I think, as you sort of grow onto the industry, it's going to change from that to like a legacy, right? It's going to do that to reputation. It's going to go from that to other things. So keep a keen eye on what you define as success over your career. And so the combination of those 3 things, right? So skills, passion, interest, and success and impact is going to define sort of your career goals. So Matt, back to your question about what are the industries that excite me the most? Look, I think again, it's the reason for me saying that is that if anyone of you are thinking about that, put those in that lens of those 3 metrics that I just talked about, right? In terms of interest, skills, and impact. But I think for me, there's probably 3 or 4 things. I think the fintech area is like the biggest. I think it's like number one, just given like how legacy banks and financial services institutions are so entrenched, and you still see like, the market caps of those companies, and not that, Wells and Chase and Bank of America and all these folks aren't, going to be like around in their commercial credit card and financial services space or whatever in the next 5 to 10 years. I think if you just think of things like they still have overdraft fees, right? They still have all these things that are legacy that I'm like, what world are we living in, right? So I think you have to think about, to me, fintech is a no-brainer, not just because of the number of people that are going to be transacting in this space, but just because the legacy systems are still so sort of under-penetrated. I'd say number 2 is going to be ESG. I mean, you guys already see it, but I think there's a huge push in our industry yes, it's great to, make money, et cetera. But I think what we're getting to is, why can't we also make a sort of positive environment on the industry? Because for the longest time, I think, there wasn't that focus, and now there's focus. And that means there's a lot of opportunity, because there's a lot of things that are not, behaving that way, or they could be. So to me, look, I can go into other sub industries. So fintech, and that sort of covers like, insure tech, asset management tech, payments tech, all that stuff. And you guys, when I joined FIG, and it's still the case, financial services were 50%. I think now technology, but technology is kind of weird, because PayPal, is that like technology or is that fintech, right? So you have to sort of make that distinction. But financial services was 50% of the S&P when I joined. That for me, FIG was a no-brainer, because I was like, well, I want to go join an industry where it's 50% of the S&P. But for you all, maybe it's tech, but I don't think tech is good enough as an answer. You have to dig in more. Is it like, consumer tech, business tech, and then within that, what is it? And so that's some homework I'd give for you guys. But for me, it's those two things. I think fintech, ESG, and obviously technology as it interplays into everything. Obviously there's many industries like, future of work, future of education, blah, blah, blah. And there's lots of even mega cap funds, right? Like you think of TPG Growth, some of these funds that even we've had on our platform that are really invested in ESG, or that are really invested in sort of the future of growth. And so, yeah, that's my view, Matt, on that. I'm happy to kind of connect offline. Joanne, do you want to ask your question? If you're still on. Oh, I think we lost. Oh no, Joanne's still here. Okay, so let me just read it out loud. I'll give you my synopsis answer on this. There's a lot more here. I've read something like IBD and PE associate salaries are converging since bank grade salaries. If this is true, you can talk a little bit about this and thoughts on staying in IBD, especially in okay, good question. I'm sure it's top of mind. I'm sure you're hearing like, all the news and everything. Look, both of these careers are very intense. Okay. So, you are spending, 10 to 12 plus hours a day, at the associate level, it's usually like 10 to 12 to even more, right? So from like 9 a.m. to like, maybe 8, 9 p.m. At the VP level, it's a little bit better. But at the VP level, you're covering clients, or, in banking or in PE. So my general view on salaries is, one, it's cyclical, right? So by the nature of this question, 2 years ago, 3 years ago, PE was king. And then to this year, banking is king, and whatever happens. So again, I think everyone has their own metric of impact, success, that like the third thing I talked about earlier. But if pay is really important, then yeah, I think you can look, A versus B. But my suggestion for people thinking about pay, it's in a vacuum. Number one, they're paying a lot of money to like spend 12 hours a day at work, okay, or more, right? So number one, you better like what you're doing. There's a huge difference between banking and private equity to begin with. So, if you're sort of there to make another extra $100,000, probably not worth it. You know what I mean? If you fundamentally like one thing versus the other. If you're completely ambivalent, sure, I think go for it. And sort of, yeah, sorry, Joanna. So I think you wanted to ask your question.
Oh, no. That's helpful, but also the fear was that my understanding is that VP is one of the most common roles in a bank. So kind of the fear is that like, well, I mean, my assumption is that at some point they won't need that many VPs, where enough people will stay so that the structure becomes too expensive to keep. And then I feel like if there are lots of senior people or people more senior than me who are kind of anxious, that anxiety might trickle down to the junior bankers. Maybe this is a local assumption.
Yeah, it's a fair point. And by the way, like, it's totally a fair point. And I absolutely know where you're coming from, Joanna. I'm not at all dismissing your question or anything like that. I think it's more of like, absolutely, I understand what your question is, because at the end of the day, like the flip side of this is you are devoting a lot of time. So it's sort of like, what is sort of the upside? Look, so on that point, like in finance, I think pay is like the most variable. Like what I mean by that is if you have a good year, your bucket, your band is such that you have a base salary, but your bonus could be 2x, 3x of that base, right? If it's a good year, and if it's not as much. So if you think parallelly, financial crisis, a lot of people got like half of their base because like or zero because the banks were just not making any money. There were a lot of trouble. So I think to the extent that so my point is there's a lot of variability year to year, right? That's number one. Number two, to the extent that there's sort of, oh gosh, I lost my train of thought. So there's a lot of variability year to year. And then also like, if the bank has a great year, then you're going to get paid really, really well. And to your point, Joanna, they also tend to like hire, one or two people, or sort of kind of build a team, or maybe if the bank's not having a great year or banking's not having a great year, they might downsize too. So it also flexes up and down, Joanna. So it's not like it keeps the same number of people throughout. Also, there's lots of natural attrition, and so much of the job at the director level and so on is to make sure that your team is all aligned. So even within a bank, right, you'll see, let's take financial institutions, for instance. Within FIG, right, you have three subsegments, right? Banks, specialty finance, insurance, and financial technology and asset management. If you just take financial technology, asset management, there's subsegments, right? So there's asset managers, wealth managers, private equity firms, payments providers, technology providers, whatever. So within those, you have one or two MDs or VPs covering all those things. So you have this sort of flex in terms of people and the things that they're doing, that it doesn't, yes, there's definitely encroachment, but there's enough in banking where, there's natural attrition. People go to other banks or other firms, people go into corporate finance, people go to private equity. So it sort of averages out. I mean, attrition is reasonably high in the industry, right? In investment banking. So I would say it's like, 20+%, and which is, I guess it's normal these days, but I think that's another factor too, Joanne. So if you have more questions on this sort of pay point, I'm happy to sort of take it offline, to the extent that it's helpful. Okay. Yeah. Kevin. Yeah, you got it.
Yeah, thanks. So I have a quick question back to what you were, one of the slides before, you were kind of differentiating between the different fields of finance. With banking, you talked a little bit about how there's an emphasis on developing a deeper financial skill set. And obviously, as undergrads trying to go into investment banking right out of undergraduate, most of what we learn in terms of that financial skill set is learned on the job. And so in looking for banks that we may want to work at and find the right fit, we also have to think about which banks would help us best cultivate those financial skills. And so from your perspective right now in the industry, what do you think are some of the banks that are doing the best at kind of training people and building that kind
There's so many like loaded questions here. I love it. It feels like it's in the hot spot. So it's okay. I would give an answer to this, but understand that we are working with like a lot of different banks on like their recruiting and so on and so forth. So it's not like, I'm not going to sit here and like pick favorites and stuff like that. You know what I mean? Like, and I don't think that's the intent of your question, Kevin. Look, I think, let me answer a different way. I think how you can diligence these opportunities, right? Maybe that's a different kind of approach to the same question you're asking. Devil's in the details, right? So the first, there's 3 or 4 things you guys can do to diligence these roles, right? Number one, number one is you could just come to these Elevate events and you can ask the banker straight out, hey, we're in Goldman Healthcare, like what's the activity like, what's the training like, et cetera. Maybe one rule of thumb is generally, I think boutique banks, they sort of maybe expect, maybe expect is too strong a word, but there's just some, light expectations, and their interviews are also more technically like challenging. The expectation is sort of there's some baseline understanding of finance that you kind of hit the ground running. So they might not have, at GS we used to have like I think it was like almost like 2 months of training, but I think a lot of the elite boutiques it's a lot smaller, right? So in terms of the expectation to come out there and sort of hit the ground running, you can see that as two edges of the same sword, two double-edged sword, right? One is that they want you to get on and they give you really, and on the flip side of that, for an elite boutique, it's usually very, very thin teams. So you'll have maybe like a VP, like a Centerview or an Evercore come to mind, where Centerview, for instance, it only, they sort of is like an MD and then probably a VP or an associate and then an analyst. So you're getting to work on a lot of, concentrated deals on these lean deal teams. Whereas at Goldman, you may have, a MD, a VP, of associate and an analyst. So perhaps, it's larger deals, but the work is a little bit more spread out. So that's one way to think about it, Kevin, and sort of one metric is sort of the larger bank versus boutique. But look, there's no hard and fast rule on that. The second thing is I think you should think about like what banks and what's the league tables like, right? So if you look at healthcare deals, sort of, usually like JP and GS are, 1-2-2-1, whatever. And then, but soon after that, you'll see like Lazard, or you'll see like whatever. And then I think it's important to sort of both bifurcate it by volume of deals, because league tables are by volume as well as number of deals. So that's like a rough proxy to tell you, Kevin, like, is that, because to me, it's not as much like how much training they give you the first week of the job or something like that. It's more of how much training are you given by way of actual deals over the course of your 2 years of a banker, 1 year or 2 years, 3 years, right? Kevin, I think that's a better approach to think about that question you just asked me. So I would look at sort of deal tables, number of there's no formula, and Kev, you can reach out to me afterwards. I can give you more like specific advice, but I think there's no like formula other than if you kind of look at deal tables, and if there's a lot of deals and it's sort of Lazard, and you're like, oh wow, like, you know, like Houlihan restructuring is a great example. Like Houlihan does a ton of deals, but they're not the biggest deals. But if you look at organized by number of deals, they are like the market leader. So again, sort of depends on the firm, on the group, et cetera. But one way you can cut it is by looking at deal table rankings, both by total volume of deals and a number of deals happen. Look, I wouldn't. And the third way is to just kind of, as you network, sort of ask and sort of make a mental list of what professionals, what analysts are working on. So if it feels like there's a lot of pitch activity, then you're like, oh, okay, cool. Maybe this group is a lot slower. If there's a lot of deal activity, then you're like, all right, well, maybe this is sort of a lot of things. Again, pitching is not bad. Like pitching, you do get to build a lot of great skills. And I don't know if we'll have time to go over what a pitch is, but a pitch is basically you're asked by a PE firm to go pitch if you're going to take a company public or go sell it, kind of what the valuation you'll get on it. So there's a lot of fundamental analysis that you do there. But when it comes to interviews, like pitches are sort of like B+, you know, deals are like A, you know, like an A. I actually say pitches is kind of like a B-. But so like, you know, that's sort of the dimensions. And so, yeah, so Kevin, I would say those are my 3 metrics. I'm sure if I had a little more time and a piece of paper, I could give you the rankings, but you know, for now we'll pause with that. Okay. Okay, cool.
Awesome. Thank you.
Yeah, of course, Kev. Okay, so let's keep going here. 1 second. I'm going to pull up my slides again. Okay. By the way, I'm towards the end of this call, I am going to share, actually I'll just share right now, a testimonial thing or whatever for Elevate. So Kevin and David, if you guys can facilitate this afterwards as well, you know, if you feel like you learned a lot, you can leave a 5-star testimonial. It helps my team a lot. And also write that you took it at Brown, so we kind of know what schools are sort of answering it and stuff. So again, that's the link. And I will also share really quickly before I jump back to the slides, some of the other resources that I shared. You know what? I'll share that in a second. So that's the link for the testimonial. And then here is a few other links just on a couple of the social media stuff. This is for more on upcoming events and things like that that Kevin asked about. So let's keep going on the slides. I think I do have a lot of slides. All right, let me just go through recruiting and try to break this down for everyone in as much time as we have left. So I think there's 5 main pieces to the recruiting puzzle. This is mainly for banking, PE, and to an extent to consulting, I suppose. Number 1, university. Okay, so here's the deal about Brown. Brown has amazing alumni. Brown does not have every single bank come to campus. Okay, so that's sort of the double-edged sword here. You can obviously go to David and team to sort of figure out what the recruiting path needs to be, but obviously the fact that you guys are all here and as part of this club shows that there's an element of interest, right, in these roles. I think the best thing Brown students get to, so generally university, right, there's if you go to certain banks, there'll be university specific recruiting teams, and or firms will put job postings on campus, or they'll be assigned. But because I think, for instance, at Brown, there is not a university-specific team for every single bank. So a part of your diligence as you go through the recruiting process is to figure out which university has, or which bank has, a Brown-specific recruiting team. But don't just reach out to the banks that have recruiting teams, but reach out to like every bank. But your approach to networking is going to be different, right? If a firm doesn't specifically have a recruiting team, or you don't know yet, just reach out to Brown alums. Like that's the best place to start. If you are sort of a first year, second year, or even a third year, sort of in this process, just start with Brown alums. There's a shared interest there. There's sort of alumni network, et cetera, that you guys can use. So I'll come back to the networking thing in a second. So the first thing is university, figuring out, you obviously go to a great university. Now let's put that to use. Number 2, academic performance. This kind of goes without saying, most banks have sort of a cutoff, just do well in school. It's probably like a 3.5, 3.6, 3.7. So it's not something I think most of you all should be worried about. But if there's a reason, like, we should talk about it. But generally, your first year, try to do well in school, and your second year, a lot of the questions we'll ask you around, especially at Brown, there's not like a concentrated finance major, is like, why are you doing the majors that you're doing, right? And I would say generally across Elevate, I see about 60% of people in business, economics, finance-y majors, but then also 40% of people from liberal arts or, philosophy or history or math or blah, blah, blah. So whatever it is, it doesn't really matter. I think we just want to know why you selected it and why that interests you and why that drives you. Internship progression. This is actually important. So what differentiates, candidate A from candidate B, right? So if I'm looking at, giving examples here, Blake and Kevin's resume, you guys both have fantastic resumes, I'm sure. But, if I'm looking at both and it just says like Brown University, Brown Private Equity Club, 3.8 GPA, 3.7 GPA. But then I'm like, okay, what is the difference between these people? So then you sort of get into leadership and sort of internship involvement. So the best thing you guys can do your first and second year summers is just get an internship in something that's ancillary to the careers you want to get into. It does not have to be a hedge fund or a PE fund your first year, but just show a progression. So maybe it was business development for a startup and that was venture backed. And so now you know how venture backed companies work. And now that's gotten you interested in finance and actually working on the other side. Fine. Maybe it was corporate finance. You were looking at, M&A, or you're looking at sort of financial things for a small startup. Great. That got me interested in finance. I don't necessarily want to focus on corporate finance, but I want to focus on financial and the financial markets. Whatever the reason is, have a good story, but have a trajectory as well. Try to avoid like summer classes and summer things. Just try to get a job, okay, for your summer. And because you only have 2 summers before you start recruiting. You actually have 1 summer before you start recruiting. So, try to make it impactful. Networking, I said this earlier, it's critical. The reason for that, and I use this example at Brown a lot, is, we get 200 resumes or 100 resumes from a single university. Like I said, they all look the same. It's like, replace Kevin with Blake with Joanna. It all looks the same. So, we want to know who has taken the time out to get to know people on the team, because out of the 300 or 200 or 100, we only have interview spots for like 20 people or 25 people, right? So it's really hard for us to funnel it down. So as you start networking and getting to know more people, your goal should be to get people to start pounding the table for you at these different firms. Again, I'm not sure we're gonna unfortunately get to private equity here today, which is a little unfortunate, but we'll try to do as much as we can. Okay, sorry. Okay, so that's networking, and then interviewing. I would say for interviewing, your guys, you have to have 5 to 6 good stories. I'll go through what the interview questions you're going to get are in a second, but generally behavioral fit is the most important, followed by technical aptitude, which is a lot of the questions you'll see in some of these PDFs and things like that. Again, don't kill yourself over the technicals. Try to do a baseline level, but then really, really crush it on the behavioral stuff. I'm not going to go through this piece. I'm going to keep going here. Resume building. Look, at the end of the day, when I look at a resume or resume book, I have maybe 45 seconds to look at any single resume. So don't put 50 things on there. Put 3 or 4 things that you're really proud of, that really stand out, that make an impact. Don't say like, oh, did this consulting club, then did this, and just like one bullet or nothing under that. I'm like, well, these are just a list of names on a page, right? So what does this person do in the consulting club? What does this person do in the private equity club? Better example would be, say, Brown Private Equity Club, organized speaker series, with private equity speakers, or like, manage weekly meetings for, 50 students, or, did case competition or pitches for the X, Y, and Z industry. Like, that's more like, okay, this is someone who's doing something, right? Not just putting like a bunch of titles on a page. Focus on relevant experiences. Obviously, if you have to kill one of the bullets, then make the one that's not as relevant. You need to focus on action results, right? Oftentimes I see like, oh, club had 50 members or something. I'm like, well, so what did you do, right? What did you do in the club? So like, I led recruiting, or like led portfolio management for a 50-member team. That's more impactful than just saying, oh, club had 50 members, right? So just make it sort of impactful, action oriented. Yeah. So again, we won't have as much time on the resume stuff, but generally know that I'm going to scan your resume left to right. I spent 45 seconds on it. So your first 3 bullets in every single bullet, or first 3 words should be good, because that's what I'm focused on. All right. Led, financial analysis, worked on, client presentation, presented to client, like all that stuff is good, right? I don't even get to the end of that page. Networking, I talked about this for Brown students. I think critical to just start an Excel spreadsheet and organize it by tab of each firm, and then just put on their analyst, associate, VP, MD, any single Brown person, Brown University person you can think about, and put him or her on that list, and then start reaching out to them. How do I want you to reach out to them? There's two examples I will give you. One is, hey, I'm Kevin. I noticed you were at Goldman. I'm really interested in that firm. I'm really interested in banking. I'd love to sort of take I go to Brown. I'd love to spend 10 minutes to kind of get on the phone and hear about your experience there. Number two, hey, I'm Kevin. I'm a student leader at Brown. I at the Brown Private Equity Club. My prior summer, I did X, Y, and Z. I went through your background. I noticed that you kind of went from Brown to Goldman. I am really interested in Goldman and specifically financial services because of X, Y, and Z things that I'm following in the space. I know you're really busy, but I'd love if you have 5 to 10 minutes, I'd love to sort of connect with you and hear any advice you have as I go through recruiting. So notice how the second email is already connected with that person, gives them sort of 2 or 3 specific to that person things that they can relate to, and then sort of tells them about yourself and why they should respond to you, right? So that second email will probably get 2 to 3x response rate of that first email. So my point in these emails is make those outreach emails targeted. It's okay if you don't reach 50 emails in a day. Make the 10 emails you do really, really good so that the hit rate is higher, right? If you spend copy and pasted 50 emails to every single analyst at Goldman, they're going to forward your message around to everyone, and then no one's going to respond, right? So I think just sort of keep in mind like how you guys are think about this process and be thoughtful about reaching out to people. That's only the first step. So you reach out to 100 people, only 20 will respond. So follow up, etc. Like there's that stuff you can do on the networking side. And then number 2, like I said, in the communication, even maybe only 50% will even open your email, right? So, but make the communication good. So give them a reason to respond back to your email. And then finally, the actual meeting, treat it like an interview, right? So go in prepared with your set of questions and be flexible though. Don't just stick to your questions. See how the conversation goes. And even if it's 5 minutes, if it's 10 minutes, if 15 minutes, treat it like an interview and make a good impression. And then obviously after that, follow up, right? Follow up and say, hey, your advice has been really, really helpful. I'm going to make sure to take up X, Y, and Z that you said. Take notes during the call so you can have it in your Excel and you can always reference it, 3 months, 6 months, 8 months, 9 months down the road. And then go back to them and say, hey, would you mind if I, stayed in touch with you as the process goes along, et cetera. So bring them on your team is my point, right? So make sure like they're the people that will then pound the table for you when recruiting comes around. Okay, is that clear on networking, people? Okay, cool. Last point I'll hit on interviewing in the interest of time. I think we're 1 minute over. Behavioral questions. So we went and sort of polled our audience and maybe 100 or so bankers. And sort of this is the responses we got. What are the most common interview questions that people were seeing? Tell me about yourself. Again, had we done this in person, I would have definitely called on you guys and asked you to do your elevator pitch. But obviously Zoom is a little more challenging. So definitely this is something you have full control over. Like you may not have any control over any other part of your interview, but this is a part of your interview you absolutely have control over, right? So nail your 90-second pitch. Hey, I just went over and gave a sample pitch, but why are you here? Why are you here speaking to us? Why are you here interviewing for banking or PE? Why you versus the other 30 people that are in the waiting room? And sort of why now, or why this particular opportunity? So you want to try to cover all 3 of these things. The way you do that is personal interests, prior experiences, relationship, rapport with the firm, so on. You get it, right? So that's kind of what you're trying to do, and then sort of how you do it. Again, perfect that. The other questions, it's standard, right? I can tell you, I could give you the cheat sheet. It's all about your stories, right? What are your strengths? Give examples and make them like relevant to the job, right? So whereas picking something like, this is probably a fine answer, but kind of saying like, I like organize, sort of, I was like a high school star swimmer. I think that's fine, but if the story should have more than that, right? I woke up every morning and trained 4 hours a day to kind of get to that level, or I organized my team around that, or whatever things that's relevant to the job, right? Teamwork, analytical skills, technical skills, communication, leadership, etc. Make it relevant. Weaknesses, again, important. We won't probably delve into this. Challenging situations. There's a lot of situational questions on hire views these days. You're getting a lot of situational questions, right? Like, hey, and 2 MDs give you a deadline. How do you react to that? Client calls you at 5 p.m. You're the only one in the office. what do you do? Right. So things like that, I think you have to be responsive. It's testing what we call judgment, right? So what are you going to do if kind of you're put in these positions? Okay, let's keep it moving. Finance. I think the thing about technical interviews, look, there's a technical piece, which, you guys can sort of read a PDF, or you can look at the Elevate stuff, or whatever you want to do, in terms of training. More importantly, I'm going to ask you, what are the things you're tracking in the market, right? Like, what are the deals you're tracking? What are the industries? What are you seeing in the market? I could ask you, what do you think about the interest rate policy? Like, the only way you can answer that question is, had you been subscribed to Wall Street Journal or Deal Book for the last 3 months, right? So put these things in place that'll help you be successful. This isn't something you just wake up one morning and decide to interview for, and suddenly now you're like a finance expert, right? So I think just important to note some of these things. Again, let me pause here. There's sort of a lot of stuff left. I will share the deck if people find it to be interesting after the session. But I know we're 4 minutes over. I know we started 4 minutes late, so I think that's okay. But let me pause and see if folks have any questions. Has this been helpful for people? I think we try to cover a whole swath of different things that, thank you, Joanna, that I think hopefully are helpful for people as they embark their careers. Over the next 2 months, we're absolutely going to have a ton of private equity content. Okay, so like we're going to have on speakers and firms and so on. So I know we didn't get to a lot of the PE stuff today, but it's sort of, we did in a sense, and it's sort of a stepping stone. All the interview stuff I talked to you all about is relevant for PE as well. Obviously, banking is like the first intermediate step. So let me pause here. I'll take, if there's any final questions, I am happy to take them. I shared my LinkedIn. Feel free to connect there. Again, take 10 seconds and write the Brown testimonial. The link that I sent, just add it. I see some of you guys have already done it. Thank you for doing that. So again, just leave a 5-star testimonial saying what you learned in the session and whatever you want. But yeah, let me pause there. Any final burning questions before let you guys enjoy your Monday night? Okay, excellent. By the way, one last advice I'd give you is networking these days is really challenging, right? It used to be that firms would come to your campus and speak and kind of do this. Today, we only have Zoom as a setting. So my advice to take advantage of this is, let's say a firm comes in, like David or Kevin or Emma or one of you guys organized a session with a firm or a professional. A great way to differentiate yourself already is by not for this session. I don't care about the session, but like raising your hand and asking a question, or right after the session, right? Like emailing them, thanking them on LinkedIn, because or email or whatever. And the reason I say that is the number of people that do that versus that don't is still shocking to me, right? So my point is, next week, let's say you're talking to Goldman Sachs comes on campus and doing it, make sure you like add everyone on LinkedIn, or at least email them and sort of just say thank you for doing the session. The reason why it's important is, let's say when their application deadline opens up, you have a cold connection that you just convert to a warm connection right away, right? So then you could go back and email and say, hey, guess what? I really enjoyed your talk at Brown. I'm applying through the process. So, any advice you can give me, or I'd love to get back on the phone. That's just going to increase the likelihood of responding to you versus being like, oh, remember I met you 3 weeks ago. Then I'm going to be like, well, why didn't you, follow up with me 3 weeks ago? I have no idea who you are. You know what I mean? So my point is, try to like strike while the iron's hot, I think is a trend. So, or the terminology. So that's maybe one piece of virtual networking advice I'd give everyone here. And that also help you differentiate amongst your peers. So on that note, I will turn it back over to David and Kevin. Yeah, thanks for having me. It's always nice to be back. Obviously, unfortunate we didn't do this in person like we did the last few years, but I'm sure that'll change soon. And yeah, best of luck, everyone. I want you guys to be successful in this process, and then come back next year and be panelists for me, right, on all these events, and kind of share your journeys. And that's the ultimate goal here, because the platform is intended to pay it forward every generation. So all the MBAs you hear, or all the bankers you hear next week, are ones who are in your shoes 2 years ago. So don't worry, you'll all be successful. And success is a determination of sort of your own persistence and consistency. So anyway, I'll turn that around back to Kevin and David and team.
Yeah. So huge thanks, Kaushik. This is super insightful. We're really excited to have you. And hopefully we're going to get that pitch deck and this recording out to everyone who wasn't able to make it today. Yeah, this was awesome. If anyone has any questions for Kaushik, please contact him. He's awesome. I've been contacting him for a few weeks now. Super kind, super helpful. So please
Yeah,
reach
no
out.
worries. I just shared my LinkedIn as well for anyone that missed it earlier. Definitely get on Finect. I know we have a wait list at Brown right now. We are not open at Brown yet, but definitely get on Finect. It's going to be amazing, especially anyone going through interviews right now. You can mock interviews with someone at Penn or someone at MIT or someone at Stanford or Georgetown. It's an incredible resource, guys. And you also get to know, oh, this firm has opened up their deadline, or like, I met this person at the firm. You can share notes, etc. If you're going through buy-side stuff, etc. Just an amazing resource. I encourage everyone to check it out. And yeah, last but not least, do not forget to do the testimonial. I share this link again. But in that note, David and Kevin, I'll have my team send out the PDF probably tomorrow, as it's getting late for them. And then also the video recording when it's ready, probably in a few days. And for anyone I'm going to see on Friday, look forward to that. That's with the Wharton, Blackstone, Goldman, Lindsay Goldberg, Morgan Stanley, all those guys. So it's going to be just an awesome 1 hour session. Like the whole point of these sessions, guys, is we spend all this time researching all this info, but you could just literally hear from people who've literally been down this process 2 years out of you, and you could get all the information. That's the whole point in efficiency that we're trying to solve here. Okay, then on that note, have a great evening, guys, and we'll see you guys soon. Bye-bye. Cheers, everyone.
Thank you.
Thank you.
Bye.
Thank you.